Hey guys, Mike here. So, boy, what a day in the market, especially for small caps. Straight down they went, and something very big happened. Did you catch it? We've been talking about it for a while, and of course, one of the most important charts I think you need to be watching for sure going into tomorrow. I will cover that as well, because don't forget, what do we got tomorrow? FOMC. And didn't you love how they left the market, how they left the SPY, where they left the IWM? It's like a big soap opera as usual. And also we'll let you listen to a quick blurb or video from Jim Carson with a warning he's kind of putting out there to say, be prepared for this right here. And sometimes he said kind of surprised me, but definitely, we'll look into let you listen to it and see what you think about that. But understand, here we are, obviously on the 15th on, you're supposed to hit this bullish seasonality, blah, blah, blah. But you really look at it, it's like more like the 19th or 20th when you're really supposed to ramp up, and the market's supposed to ramp up, because what are we on the 17th right now? Just what happens FOMC is tomorrow. But look how they set us up here. Obviously, you got SPY wedging right here. No surprise there at all. And then, of course, you go over to IWM, where they leave this one, sitting at the 0.79 fib, bounced on it like multiple times right there. So we're going to see, what happens. Of course, what's the market expecting? The market is expecting what? A rate cut tomorrow, 95%. Another cut, which would be the third cut. And I know everybody's saying, wait a minute, inflation's not going down. Economy are saying strong with all this data. Whatever. Maybe they'll shock everybody and not cut. But the big thing today was we talked about this trend line. Here it is. Finally got rejected this morning. It came up overnight. Finally got rejected now. So that's 1, 2, 3, fourth rejection there. That does not mean this has to stop here, okay? You got certain firms that are calling for 6% on this freaking 10-year yield. This will depend on how it reacts to FOMC. We're going to look at that, okay? So again, FOMC is going to be tomorrow. For those who don't know and live in a hole between 2:30, 2 o'clock, you'll find out if they're going to cut rates. 2:30, you'll get Papa Powell running his gums and trying his best not to actually answer questions and stuff. But again, right now we're expecting a cut. Let me know in the comments if you expect something different and the Fed Watch tool to be actually wrong. But when we look at what happened in the last 2 cuts, we'll just look at this and say, okay, November 7th, what happened? Well, we go back and look and we say, okay, they made the decision clearly somewhere in this neighborhood right here around 2 o'clock. The 10-year decided to sell off the rest of the day and on Friday, and then went on a nice long little pump up to that trend line once again. Okay, so that's what happened then. So you can bet IWM probably popped in that 24-hour period. What happened on September 18th when they cut? And as we can see, ends up going on a nice little run over, looks like, over the next few weeks right here. And so again, that puts what? Pressure on IWM. So that was a nice little run up to the trend line once again. That went on for like a month and a half right there. And so again, this is what we're going to have to see. Is it going to run up? Is the 10-year going to say, no, this doesn't make any sense. Inflation ain't coming down. You're supposed to tell me the economy is strong and all these numbers are coming out hot. Or is it because it's set up and already rejected this trend line, we get a move down over, say, like the next 2 weeks or something. And it cools off because it has been on a nice big run up, right? And so we're going to get to find out, does seasonality actually went out, and do we go on this, Christmas rally into the year end and stuff. And so I want you to at least listen to Jim Carson talk about the flows and something, I guess, surprised him and something to be very wary of.
The OPEX today, you got a week that's got the Fed, inflation after the Fed, and obviously sentiment running pretty hot right now. So what takes your attention, number one?
So OPEX always takes my biggest attention. This is DECE OPEX. This is the biggest OPEX of the year.
This is like your Super Bowl, basically.
This is our Super Bowl, right? Basically, this has been on the calendar for years, right? These were leaps. People put lots of positioning on against it. You have all kinds of structured products tied to this as well. So this is a huge, huge deal. The Monday of these OPEXs, the Friday into the Monday, are the most supportive. So not a surprise you're seeing this little bump this morning. Candidly, we've been talking about these flows and how supportive they are. We've seen it.
Yeah.
But be aware, as we work through it, those flows start to come off the table. And that's why we've talked about be careful in January for some time. Mm-hmm. Now, the reality is the momentum that we've been having now is not as strong as I would like, given how strong these flows are. I think that's something that I'm going to highlight today.
You think kind of breath breaking down a little bit, or what?
It's less a function of breadth. The breadth breaking down, as I would expect with the vol compression that we've had, I'd expect some rotation.
Okay.
But the general impulse in the market has been quite weak, given how strong the flows are during this period. You know, this is a year that the markets are up 20, almost 30%,
Yeah.
right? On top of that, you have these massive structured product issuance, bigger than it's ever been. I mean, in 2 years, we've had a doubling of structured product issuance. So there's a massive amount of flows here. This is bigger probably than you've ever seen this period. Yet we can't seem to get going. Why is that? Well, knowledge is vol dampening. Some people are aware of this. Also, everybody's in. People are in. If you look at the numbers, the positioning is very long. Why? Because it's continued to work. So at some point, again, we called for weakness in September after a summer of George. That summer of George was very vol supplied, very consistent. We were right. Came early. We got a big decline in August, right? This is a little different because you have that, again, end of year supportive flow. So I wouldn't expect any crazy volatility here, but volatility is coming. Prepare yourself.
And so we're going to get to see, obviously, is it going to be really volatile? Or are we going to get a really good Christmas rally? Or like, it was okay Christmas rally. It wasn't too bad. More or less a few stocks versus the whole market type of thing. And, you know, look, I understand you got Tesla gamma squeezing, right? They're playing the 500 calls repeatedly on any kind of pullback. You got Palantir went absolutely insane. You got quantum computing stocks, flying car stocks going absolutely berserko, up 30, 40% in a day, multiple days, and then dropping 50% and then going back up, right? But I challenge you to go find the breadth of the market. It is so bad, as I told the members in the video I just did for them, that I had to go triple check it this morning just to make sure TradingView wasn't broken. That's how bad it was. I've actually never done that before, but I was like, woof. Because you would think, you know, as high up as we are, you would just see like, oh my God, look at all these stocks participating. And that's not the case at all. But, you know, the big question is, can NVIDIA finally break this head and shoulders, right? It finally bounced it a little bit. Didn't get back above neckline. They're trying to pump it in after hours right now. But can it do it if Tesla doesn't take a break or come down, right? Can AMD finally get out of its own way and get some love right there? It's starting to come and form a certain formation or a certain pattern as well. And so these are things to look at. But here's the most important stock chart, or one of the most important stock charts, to look at right now, and it's RSP. Because RSP has just been a mess. I mean, this thing has been down like 12, 13 days, or it's on a downtrend for at least 13 days now, I believe, when you look at this. I mean, broken that trend line, broken the 50, and this is the equal weight ETF, okay? It is coming down into what? What used to be a prior all-time high, was resistance twice, was support once. So if it's going to get bounced, I mean, what's it coming down into? The FOMC, the rate decision, right? And if you want to see the market move really hard, really fast, let RSP get behind it, okay? Let the SPY and RSP go up at the same time. That's when you know a lot of stocks are participating, all right? This is a rising wedge. You can see it's breaking that rising wedge. It's going to carry out. What to find out, I do find it a coincidence that FOMC is tomorrow, and here we are with this chart right here. Again, it uses the hold the 50. It really respects the 100, so we could see this fall through. That's what we got to see, how the market's going to react, how the 10-year is going to react, where's money going to flow. They're really going to give it up and not do the Christmas rally. They're going to try to shake somebody out, right? Now, looking at AVGO, we talked about a pullback and a cool-off. Didn't quite reach my 50 fib right there. Didn't quite reach the gap. That's fine. Missed it by a 0.68 after about a 7% drop, I believe. And so when you're looking at this, again, I'm not going to try to make this difficult for you because, again, tomorrow it will be volatile. There's no doubt in my mind about that. But you're looking on the downside to fill the gap around 230 right there. If we get to the downside, to the upside, look at that. We left the gap. Okay, so just look at the bottom gap. And then look at the top gap right there, which is going to end probably around like 248.50 if I'm not mistaken. So just pay close attention to that. Again, it's been a huge run up, guys. I mean, an enormous run up. And so that's just the way it is. And that's why I was telling you, a lot of people are selling calls, right? Because they're willing to have their shares called away if it reaches a certain point because it ran up so much and they're up so much. And so that's why they were doing that. So sometimes you'll see this. When you see a lot of calls getting sold, I'm talking millions worth, then you might have a cool-off period. So just keep that in mind. If not, they'll just get their shares called away for a massive profit. And, of course, the other thing we're looking for here on AVGO is a low, a higher high, a higher low, and then we're just looking for the higher high to come in. That's what you're looking for. Just keep it simple. And then the last one's MU, which we talked about, and what they're doing, right? It's flagging. That's what's happening here. What's happening tomorrow? It's got earnings, so I'll show you in just a minute. And so, again, if this one breaks to the upside, it don't matter what the earnings looks like. If the market likes it, that's all that matters. That's all that matters, okay? If the market likes it, what do you need to break? You got to break 114.50. That's really all that matters. You got to break 114.50. You've had 3 rejections. Is there going to be a 4th one? Okay, and then if it comes down, you can clearly see 97.56. Somewhere in that area, that's where your support's going to be if it decides to come down right there. And so here's your earnings for tomorrow. You got General Mills, Jabil, and then in the afternoon there's Micron and Lennar. It's really the two biggest ones coming up tomorrow. And then here's the data for tomorrow: building permits, housing starts, crude oil inventories, and then Feds, funds, meeting, and rate, and all that fun stuff coming up in the afternoon. So just buckle up, click, because it will be volatile. So hope you guys got some out of it. Let me know how you're playing it. Please hit that like, subscribe button on your way out as usual. Appreciate all you guys who watch and like the videos. Feel free to sign up for the membership if you want to. Less than McDonald's combo, and that is everything you get with it. I'm not going to go over it today. You can read for yourself, and I will see you tomorrow.